mostly for my private community to where I send like trade ideas and stuff like that.
Okay, cool. So a lot of cool stuff Nick's got going on. So make sure to go find him. He's making a lot of content. So go find him and all of his locations. And Nick, thanks for coming on. We'll see you next time.
All right, Chandler, you guys have a great one.
All right. All right, guys. Now we're going to take it over to Chris Pulver. He's going to take us the home stretch. We've got FOMC on the way. We're going to hear what Chris has to say. So right after this.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, happy Wednesday. Happy Fed Day. It's just after 1 p.m. and this is the day we've all been waiting for. Interesting trade discovery this morning. Did my little daily profit play with my members, and we did take some profit, but we managed early instead of our typical profit target. We took about half of it off, and even right now, the trade that I'm looking at, it's still trading elevated to where I wanted my profit target, and it is now 4 hours after opening bell, which is not the typical trade. So we definitely had expected move is way higher than yesterday, but the IV rank hasn't changed much. This market is just clearly building a lot of anticipation. Around FOMC this afternoon. Nobody knows what price is going to do. I did take a trade. I posted it in the A1 Trading Service, the Discord channel for my Chris's trades. I posted it right in here. If I go to Chris's trades, this would be a stocks options trade. I did take a 569 long call on the SPY, and I did that based on this little guy right here. So I do see this really nice gamma level with a large current net position at 1854. There's no guarantee this trade works, but if we have volatility one way or the other, FOMC is notorious for being noisy. All right, FOMC is the market's excuse to move. There's clearly a lot of orders. Like, think about this. The entire market is sitting here with a big finger ready to press buy or sell. And I don't know what that button is because there's two of them right next to each other, and I don't know how it's going to play out. What I can see is gamma squeeze potential. I can see order flows pushing higher. I can see the market initially having a positive reaction. But as Nick Phillips alluded to, I mean, our Fed watch tool continues to change, where yesterday, I think I looked at this in the afternoon after closing bell, it was 65% in favor of the 50 basis points cut. That is then reduced back down to 55%. So it's not quite 50-50, but man, only 50 minutes away from the actual rate decision. This is about as tight and as indecisive as I've seen the actual rate decision. Now, we are pretty certain that there's going to be a cut today. That cut is either 25 basis points or 50 basis points. I think the 75-point move would be a big surprise. I don't know if that's good or bad. If we take a look, and this is really where I'm just judging today, it's going to be price action that leads everything. I'm not looking to have a ton of exposure going into this. The trade that I showed you, that 570, it's a 569 call on the SPY, but that expiration is out to Friday, not today. I'm not that interested in zero DTE. The trades that I'm taking for my hedges, I have an ES hedge for the 927 and 930 expiration. I have the SPY, the QQQ, and NVIDIA plays that are vol plays out to the 10-4 expiration. I'm still watching, my /GC is gold futures. My SI is silver futures. Those trades are out through October, through November, through December. I did put on another trade today. I talked about this one. I talked about it in my live session yesterday. I'm now running a 3 p.m. live session called Final Hour. And I put on a trade this morning in BTI, which is British American Tobacco. It's similar to what I've experienced this year in MO. which has given me a nice pullback, and my covered calls are up to $50 and $52.50. So I will keep an eye on this one. This has had a really, it's a good dividend play. It's like a 7 to 8% dividend that's pretty solid and very consistent. We've also had a lot of appreciation this year from the low 40s all the way up to $55. Pullback is totally fine. I'm still going to stay in this one just for dividends. But if we get a pullback below 50, that's fine. I don't get it called away then. If I do get it called away, that's okay. Every account's going to make like 10 grand. If it doesn't get called away, then I'm just going to continue to play the covered calls and give myself some upside, lower my cost basis, collect those dividends. We're getting like a 94 to 98 cent dividend every quarter. Last one was an ex-dividend of 102. That means that I grabbed $1,020 for that quarterly dividend. And, a lot of those dividend plays too, it's like it does drag the prices down typically when we have those dividends declared. But it's also a pretty range bound stock that, lows at 50, highs at 55. And if it pulls back, I'll just trade it again and just kind of continue to lower my cost basis by keeping the dividends. But we're pretty stable around this like 40 to $50. So I'm doing that with the same idea as BTI. It's behaving a lot of the same way. The appreciation we've seen in BTI off these lows is very similar to the appreciation that I saw in MO. And so what I'm doing is I put on a 35, a 33, and a 30 put, staggered out to summer of next year, so like June of 2025. And then I also put on a January of 2026, same thing. It's a 35, 32, and 30. Basically, what I'm looking to do is I want to own the shares. I want to own it for the dividends. I want to own it for stability. And I want to see if price can go up towards $52 a share. So if there's any pullback here, I'm looking to get assigned. If there's no pullback, I'm looking at about $800 in income over that 12-month period or so. And if I want to, I can protect half the profit and then be a little bit more capital efficient and then deploy that capital elsewhere. But that was a new one that I threw in. It's definitely more long-term, but near-term plays, as you may have seen me post in my trade section for the A1 Discord. A1 Trading Discord is the SPY trade for this morning. That's a 569. BTI, I put that in. And then I did the vol plays. IBIT, I've got some dollar cost averaging levels. NVIDIA, that's a volatility play for October 4th. Palantir, I'm looking for a credit spread. WIN, LVS, those are two stocks I'm looking to buy in. AMSC, I'm long. NDX, I got stopped out in a broken wing last week. Let's see here. Futures trades, I'm putting in some hedges on ES. I posted those. There's a 9:30 expiration and 9:27 expiration where we had a really nice butterfly trap last week for I'm trying to think, ended up being my net. I think I paid like $6 debit and ended up making a net $9 profit, which was pretty solid. So that made up for taking one loss, taking one win. I'm not doing the double-sided butterfly this week. I'm just taking one side and looking for the downside. And the reason why I'm doing that is because to me, my portfolio does pretty well. If things just kind of stay as is or things go higher, everything looks really good. So what I thought we could do today in the 45 minutes that I have left until the actual FOMC comes out, and Chandler and team, if I'm going to be on through FOMC, will you guys let me know? I think Frank and I could probably tag team some stuff. I'm good for a full session until like 2:50 p.m. So I can marathon for you guys a little bit. If we wanted to actually play FOMC from Jerome Powell's press conference and see a little Q&A, I'm happy to do that. Like I said, I just have to bounce around 2:50 p.m. But like I said, it's going to be about price action. What I'm curious as far as the language goes, as far as our dot plot, if we can pull that information up, if it's released right at 2 p.m. What I would look to see is, where are all the other Fed? Where's the Fed consensus? The dot plot is supposed to be anonymous with, all these different Fed speakers and Fed members. And are they all in consensus that there's going to be X amount of cuts through the year? If we look at the watch tool here, the market's anticipating 10 cuts over, let's say it starts today. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I have 11 FOMC meetings on this calendar. Okay, this is kind of crazy. We have 11 FOMC meetings from September 18, 2024 to December 10th, 2025. So over the next year and change, we have 11 FOMC meetings. Now, 10 cuts are expected. Okay. That is an aggressive cutting cycle. Now, what I think is going to be key to Jerome Powell's language today is that the Fed is cutting to be less restrictive. Okay. I think that's important because if they say that they're cutting because of concerns, if they're cutting because of employment concerns, if they're cutting because of, if it sounds like they're cutting because they have to, that might be where the market reacts adversely and maybe the market sells off. Okay. But if they're cutting, acknowledging that, look, the PCE is at 2.5%, 2.6%, inflation is trending lower. We acknowledge we don't want to see employment news get worse, but we have data that's going to come in over the next 30 to 45 days. Also, the Fed is not going to be political, right? Whether we had an election this year, November 5th, it doesn't matter because like the Fed is supposed to be non-political, supposed to be. But I know it's being painted as like that November potential rate cut in November is going to be seen as a political move. If they say, look, it doesn't matter. It just so happens we fall during an election cycle, but this would be the path forward. This is what the Fed is going to do. You just kind of address that today. Because if they say they're doing it to be less restrictive, here's where the benefit is, right? 5.5% now versus a 2.5 to 2.6% PCE, which is the preferred measure of inflation, or even the 2.5% CPI that was year over year that printed last week. The Fed has some cushion to bring rates down and be restrictive. Now, the market's pretty much anticipating that they're going to cut aggressively and get all the way down to essentially neutral. Okay. Now, neutral does bring back inflational concerns because if we cut from 5.5% down to 2.5% and inflation still is sticky right around these mid twos, inflation could flare back up, and all of a sudden the Fed is now behind, and the rate is underneath inflation, and we have stickier for longer, higher for longer, and then the Fed, do they have to change policy again? Do they have to actually hike by another 25 to 50 basis points? So I still think the Fed for right now is just going to start the process. I think if Jerome Powell, and look, I don't know about you, but I've been around with Powell as chair, Yellen as chair, Bernanke as chair, Greenspan as chair. Before Greenspan, it was Volcker. Before that, it was Burns. We don't have a lot of Fed people to go on, but I will say that Powell's a pretty smart guy, and he's been, whether you like him or not, he's been really, really consistent with being the head of the Fed. Like his language, his press conferences, I mean, I would count on maybe two to three fingers that there's like, wow, what a crazy move because he said this. Other than that, this guy doesn't give much away with his language. And I think there's a time and a place for, I mean, when he pivoted hard in December of last year and the market ripped aggressively, when he pivoted this summer, when we saw that melt up in June and July, those were really specific. I mean, that was the first time he just explicitly said it's time for policy to change. Well, that gave the market all it needed, and we kind of, ran into higher highs and pushed higher. We had that 6 days in a row with 6 all-time highs, and then we topped out mid-July. But here we are, the market's aggressively buying the dip, anticipating rate cuts. Like I said, I think the proper language to show that the Fed is doing the right thing, acknowledging they need to cut. If we're going to have an additional growth cycle through this late cycle expansion, right? We've been in expansion for a long time. We've been in a bull market since 2009's bottom with some hiccups along the way, but the market has ultimately made higher highs. So whether you like it or not, all the volatility or not, all the recession concerns or not, all the signs, everything that seems like, oh my gosh, this market. Look, risk has to be managed because I don't know if the market's going to fall 10%. I don't know if the market's going to fall 5%. I don't know if the market's going to drop 30%. I don't know if the market's going to go up 5 or 10%, right? But I did find it interesting to read this morning. So my point is, if the language is we're doing it because we can, we're doing it because we see now it's appropriate that we can be less restrictive for these reasons, and they list it all out, and it seems like, hey man, the Fed's in control. Their narrative sounds confident, optimistic. They're not feeling like they're behind, and the market's not acting like they're behind. Maybe that's the good thing today. And if it's 50 basis points and they justify it and they give them, they give the market what it needs to just be happy for the next 30 to 45 days as we kind of wade through the data. Honestly, maybe price action is just really, really sloppy and choppy and messy, and we don't have a lot of direction. That too would make a lot of sense because all this stuff from 25 to 50 basis points has been priced in. All right. That doesn't mean we turn around and sell right away. And it's the buy the rumor, sell the news. If we have a sell off, I'm curious to what degree. Are we going to see a 1% sell off and then it pulls right back? Are we going to see a 3, 4, 5% sell off? We saw that right after Labor Day, but it pulls right back. It might just be volatile. And I've said this. I mean, the market might be volatile. Let me get rid of this chat here for a second. Okay, the market might be volatile. There's a lot of ways to consider this. Okay, I'm just going to talk simple price action. If we go this way and this way, this would be a pattern that we could go down and back up and down and back up and maybe down here and back up, but it doesn't really change any structure. This to me would be a potential setup for a breakout because it's an ascending triangle. We're making higher lows. The bulls got us into this momentum to the upside, and we're looking to see if the bulls can then continue to take us out of that. I could see price doing that and not really giving us any clear direction, right? To the downside, I see this low and this low, and I see this high. If we pop up to these highs but fade, I could see a bit of a broadening pattern where we have a fake out to the upside, and then it sells off, and that puts in an intermediate top, and the market does spend some time over the next maybe 30 to 45 days decreasing, going lower. Here's an interesting thought that I posted this morning in my Discord and Telegram. Let me find it right here. Okay. Yes, the Fed has cut with stocks at all-time highs, and the bulls tend to like it. S&P performance after Fed cuts within 2% of all-time highs, right? This is the S&P going back to 1980. If you can see these little dots on here, we cut near all-time highs, we cut near all-time highs, we cut near all-time highs. Same thing here. All these cuts near all-time highs. If you can see my graph, I know the numbers are probably really small. Let me see if I can zoom in here. Nope. Let me see. There we go. Everybody see this? So the 1 month return. So officially today is going to be the cut, right? So if they cut today, the average 1 month return is actually negative 0.2%. Okay. Well, September also averages anywhere between 0.7% to 1.2% negative for the month over the last 5 years, 10 years, 70 years. September is not a good month, and we're not done with the month yet. So there's a chance that we might still have a rough month ahead, and it's just volatile, and then we figure out how to get through it. But let's say that you look out past today and past this week and past the end of the month. Let's see where the market is. Well, 3 months after that first cut, the average return is 2.1% higher. The median return is 3.3% higher, and 15 out of 20 times in the past for the last 40 years, 15 out of 20 times this market has been higher. So let's go out 3 months. October, November, December. By the end of the year, this market is going to be higher, according to this, 15 out of 20 times. That's pretty good odds. If you think about it, if you were a trader, which all of you are here, okay, 15 out of 20 is a 75% probability this market will be higher. That's a pretty easy thing to position for, and it doesn't have to be super short term. All right. So that's 3 months out. 15 out of 20 cases have been positive. 6 months out, the average return is 3.8% to the upside. The median return is 6%. 15 out of 20 months, also a 75% positive track record. But that's a bigger return, right? 3.8 to 6%. What's crazy is 12 months from now, the market has been positive 20 out of 20 times for the last 44 years. That's pretty impressive. Now, that's why I said earlier, it could be different this time, because what if we break the streak? What if we go 20 for 21, which still looks really good, but what if a year from now, by September of 2025, we're not higher, right? But all this has to do is be 0.1% higher, and that would officially be 21 for 21, even if it finishes just a fraction higher. So I do expect the Fed is doing what they can to kind of sustain this growth cycle, even in the late stages. We're seeing these rotations into defensives. We're seeing this rotation into utilities. We're seeing this rotation into things that typically don't lead a bull market. But late cycle, before we officially turn and before things really contract, these are where the defensive plays start to come in. And I mean, again, maybe this reignites tech. Maybe this reignites a lot of things because it's going back to money supply is increasing. cheap money is coming. Cheaper money is coming. People are going to be bailing out of those fixed income instruments like money markets and certificates of deposit to then see either 5.25%, 5.5% all of a sudden they're going to start going down to say, oh crap, I'm now down, 50 basis points or 100 basis points. It's not the same to have risk-free trades. So it's going to force them to maybe take on a little bit more risk, maybe go into something that's inflation friendly. Assets tend to go higher. The dollar, I think we can all agree, the dollar is likely going to be what's sacrificed in this next phase. If we go higher, I think the dollar is going to be a big reason for that because the dollar gets weaker. I think there's big money on the sidelines that is still, I mean, we've seen a dollar trend lower for the last couple of months, but I still think there's a lot of dry powder waiting to sell the dollar even further to the downside. So even if the dollar gets stronger in the near term, I could still see dollar weakness. The yen pairs, everyone's concerned about this second deleveraging, this second unwinding of the yen. I could see it happening, but I still don't trust the Bank of Japan, and I don't think anybody else should either. They are the most radical, extreme central bank out there, where you never know what you're going to get other than when you're wrong, you're dead wrong. When you're right, move your stop loss to break even and then rack in thousands of pips. But it is such a like binary black and white experience with the Japanese yen. You're either right and you're loving it or you're wrong and you're hating it. And that's pretty much my experience for 20 plus years in trading the yen. So I don't like to trade the yen that much for that exact reason, because I don't think it technically obeys like a normal currency pair does. It's a weird, fundamental, irrational currency. And I don't like to trade that. I trade currencies because it's very efficient. It's super liquid. And when we see the Japanese yen behave with just really aggressive risk on or risk off tones, and we see these irrational 3, 6, 9 months trends, I don't like being on the wrong side of that move. So, I've had some harsh lessons in the past. I've made a lot of money in the yen when I think I can, but I've also had way more stress on yen crosses than others. So to wrap this up, we'll go into some charts here in just a moment, but I just want to show this. I thought this was really interesting, right? So we're sitting here near all-time highs. The S&P is literally within 1% of all-time highs. And you look out and expect, in the first month or so after today's cut, whatever happens, 25, 50 basis points, whatever happens, the market's going to deal with some chop, right? The market's been anticipating, by the way, this is the first rate cut that we're going to see in the last 4 years. So you talk about, an interesting cycle from, emergency cuts to bazooka stimulus and COVID to now to one of the most aggressive rate hike cycle we've ever seen with the Fed and the U.S. economy. And somehow this market soaked it all in, took it all in stride, ended up going to higher highs on the backs of Mag 7, on the backs of AI, on all this hype. Is it sustainable? Is it too frothy? Is it too rich? Is it too high? Maybe. Okay. But I would imagine that we're still creating the landscape right now that would promote growth. And growth, also with the weaker dollar, could be a great place to be long stocks. Could be a great place to be long, ETFs or the indexes as those broad market indexes go higher. I'm not doing a lot of rotation into defensive. I did add Walmart to my portfolio. I'm still in some dividend plays. I do a lot of index trading, but I'm hedging both ways. I'm obviously looking for asymmetry to the upside, but I am taking stabs at the downside just in case for near-term protection. I think managing risk is always a constant. I think it's silly to be exposed if you got something all of a sudden like an event like August 5th. If you get caught off guard by an event like that, it's pretty painful. So I try to keep those risk adjusted returns as tight as possible. So anyway, interesting stuff. Just want to share. We go into right here just to finish this. So the Fed increased interest rates at the fastest pace in history, sold nearly $2 trillion in their balance sheet, yet the S&P 500, the Dow Jones both hit record highs yesterday and, continue to push like they're looking to go higher. The Fed rates near all-time highs, 20 times. The S&P was higher 20 times. Now that's after 12 months. It obviously is a little bit rockier, 6 months, 3 months at 15 out of 20, and then 9 out of 20 with 1 month, but bad track record. Also, this is interesting here. There was a 14% jump in mortgage applications as mortgage rates hit a 2-year low. So this is one thing that would be a benefit to the consumer. If mortgage rates are going to drop by 25 to 50 basis points, that might be enough to start getting people to look again for homes, to start looking, be willing to sell, be willing to buy, look to refinance. And it's just starting. I'm trying to time it a little bit better where a house in March or April, like I'm closing next year, I'm looking for a home that I can close on, and hopefully the rates are coming down aggressively. If we can see 100 to 125 basis points of cuts, I can go from a 6.2 30-year mortgage, which is right now's rate. That's the standard going. Right here's your 30-year. I mean, if this automatically goes kind of step by step with the Fed, we might see rates down as low as 5%, without having to do anything. So 5% and then offering a buy down, maybe I can close at a 4.75 or 4.6. That's not too bad. Not too bad. Makes a big difference as far as the bottom line of what your overall mortgage costs. So anyway, I think this is a good cut for consumers. I think this offers a little bit of relief to small businesses. I think one benefit of rate cuts would be the Russell. So this is one instrument that I'm watching pretty carefully. I do want to put on some trades. If we come back into these 200 levels, I'm still looking to stay long the Russell. If we're looking for growth and we see some catch-up trades, Russell still looks good to me to the upside to maybe celebrate this milestone hitting all-time highs. This index has more room to go versus S&P and Dow at all-time highs. The Nasdaq obviously has had a decent pullback, 15% sell-off July to August, and it's just trying to find its way back. But are we going to see higher lows and lower highs? Are we going to see this in the Nasdaq? It's quite possible that we do until there's another catalyst to drive this thing higher. So I'm just not looking for V bottoms, right? I'm not looking for V bottoms. I know the market seems like you buy dips and sell rips and it's all day, every day. But most of the time, the market doesn't move every day. Okay. So we have to wait and see. And today we're going to get a lot of information in the next, 30 to 60 to 90 minutes. We're going to see a lot of price action. It may actually go somewhere. It might be noise. Okay. I don't know. Watching this, there's my 570 gamma, like I talked about. That's the strike I'm looking for. If I see this price go up here today with the FOMC, with Jerome Powell's press conference, then I'm taking some profit on my SPY longs. I would be ready for a potential downturn and a fake out. I could absolutely see a bull trap at these all-time highs. Why? Because everyone thinks example, totally hypothetical here, but the rate decision is 50 basis points and the market just rips higher for today and then fades it aggressively tomorrow and Friday. What are people going to think? Is it good or bad? People, it's like everybody operates. I mean, it seems like the order flows right now, they just operate such short-term levels where you just kind of, if you're exposed in the near term, you've got to be really aggressive at taking, protecting, getting in and getting out, taking your losses in stride, taking your wins in stride, and just grinding. Longer term, look at that I just showed you. 12 months from now, 20 out of 20 times in the last 44 years, the market's been higher. So if I take that as any type of confidence moving forward, I don't have to say I'll just set it, forget it, I'll see you next September, right? I mean, I want to trade it. But at the same time, I think that if I'm going to have a tilt to the upside, it would make sense that history says that's a safe play for right now. And I look at it this way. Right now, until the end of this year or even into Q1, those are typically the most bullish periods that we have. If we can navigate September into October without having a terrible drawdown, I think November, December is just blinders on, path of least resistance, going to these big open interest levels, going to these big wide open targets, and hopefully getting there. And then we have all of the, the extra, I'm trying to think, the leaps and stuff that are expiring in December and January, all those big long-term options, all those are factored in. And so end of year, we typically see bullishness because of that. And it's thinner volume during the holidays, but the market just kind of goes into drift mode, and it's pretty easy just to stay bullish. So I'm pretty bullish at least until January of next year. I'm pretty much, that's my outlook. So what I'm doing is I'm taking my stabs and hedging to the downside just as little protection to kind of give me those asymmetrical payouts. If I need it, I'm glad that I have it. If I don't need it, I'll take the small losses. I'll move on, watch the portfolio go up, and hopefully we see this thing kind of move up uninterrupted. But we're going to have some volatility, right? I don't think anybody would be shocked to see from this current look of the S&P that this market is going to be potentially pulling back. Let me draw a little line here. I mean, would anybody be surprised if we poke up here and then we pull back down? I don't think so, right? I mean, if we pull back to the September sell-off lows, are we coming all the way back down to August lows? Not necessarily. I don't think so. Okay. So even if it was choppy in here, okay, we're just going to deal with it. We're going to deal with indecision. But I would use this area. I like this area a lot as a chance to buy. In fact, I'd be buying aggressively down here, looking for that move back up. Even if all-time highs becomes a profit target, there's still plenty of income to generate. If we come back here and bounce a couple of times, there's a lot of short-term opportunity to buy and protect, and see if you can repeat the process. So that's trading as opposed to buying and holding, you know. So we'll see if that's what it does. All right. Let's see. 25 priced in, 50. I disagree. I think 50 is priced in. I think 50 is priced in. I think 25 to 50 was priced in on this rip from June to July. And then we had the scare with the Japanese yen and we had the SOM rule activated, but the market got right back to it because all of a sudden we had unemployment claims started to trickle lower. We also had, I'm trying to think what else we had in here. We had like some positive news that did come out, and that was all of a sudden we're thinking good news is good news, bad news is bad news. And the market's like, we're fine. Right. And then everything kind of, cleared out, like the cannon fodder cleared out from the Japanese yen, and the Nikkei bounced in a big way. So anyway, I mean, we're right back to the highs. So I think the market is ready for 50 basis points. But I don't know. We're going to find out, right? So let me go into currency strength for a second. Let's see what we have here. This is today's current volatility. We had the Japanese yen getting weak all of a sudden. We're right back to baseline. New Zealand's a little bit stronger. Swiss in the middle. We have the yen and the pound on top. So right now it's New Zealand, pound, yen, Swiss on top. We've got Aussie, euro, dollar, CAD at the bottom. Volatility has been somewhat contained. You know, the downside, the weakest move this morning was the dollar for a little bit, and it's pulled back slightly. The Japanese yen was strong, and it's pulled back to baseline. So by the end of the day, I mean, we're going to see what this is made of. I mean, I would expect some type of volatility expansion going into the end of the day. I don't know which is going to emerge as our winner today. Maybe it's New Zealand. Maybe the Aussie, New Zealand. If we have some risk appetite, Aussie, New Zealand start to assert themselves as the top dogs today. If it's not, then we'll see. But I would expect there to be some type of volatility expansion to the upside. Now, let's go to the dollar. Everyone asking about this currency. I see pound dollar. Just look at the dollar. Okay, the dollar index. There's no activity that I want to take on the dollar right now. Why? Because there's no real decision to make. I would like to see this. If the dollar fakes and reverses, I could see that as a bear trap, and all of a sudden we see a short-term pullback on the dollar to one of these two levels. This is the halfway point of the range, and this is the resistance level of the range. This goes back to the last 2 or 3 years. So if we see the dollar remain in this really choppy sideways move, I just don't want to sell the lows. Okay. So if I'm selling the lows on the dollar, that means I'm buying the euro dollar higher. I'm buying the pound dollar higher. I'm buying high. I'm selling low. I hate that as a currency trader. So I don't want to take that trade. So what I'm going to look for is this. If we go lower and we fake out, I think that's a bottom. I think this dollar gets stronger in the near term. And we're going to see if that translates to a stock market that sells off in the near term. Okay. But if we start to see the dollar immediately rip up here and then start to fade, that's a good opportunity for stock markets to go higher, dollar to get weaker, start breaking into fresh new lows from 101 to 100.50, back down to 100, maybe into the 99s, 98s. I mean, I've got symmetry plays all the way out here towards 95 and 94. If the dollar is going to get that much weaker, there's a lot of movement. There's a lot of potential weakness in the dollar that could keep the stock market and commodities and gold and Bitcoin and everything much, much, much higher. Okay. Because remember, today is not just a near-term thing for the dollar. The market is probably looking at today as where's the next big move on the dollar? Because you know what the market might catch wind of? How many cuts is the Fed going to do over the next year and a half? Because you can see what this says. This shows out to December of next year. The market's anticipating the Fed rate's going to be down to 2.75 or 3%. 2.5 to 2.75% lower than now. That's what the market expects. And so if the market is now officially going to say, okay, let's start pricing that in, the dollar could certainly get a lot weaker. Okay. So I don't like this trade right now because I feel like we're selling lows and I hate that feeling. So I'm not going to do it. But if we go break and pause, then I'm looking for any type of rally to fade. I'm looking to see if this will actually play out with a symmetry move down here. There's a lot of support all the way back into those 2021 lows at 92 or 91. But I just don't want to get faked out by a bunch of noise that we see right now. This to me is a bunch of noise. Okay. And so even on the first initial breakout, I'm not taking that bait just in case this thing reverses. And we have this range that you can all see it. You can all see the range. We have support. We have support. We had a fake out here. We pivoted right there. This is a strong support level at 101. So between 101 and 100.50, there's a lot of support there. I could see the dollar using that as support and bouncing. So if we end up getting into open space, I'd want to see it take out the low, then look for any type of move to fade, and we see the dollar gets weaker, and respective currency pairs, move with dollar weakness. Okay. And Damon says dollar end of year 105. Well, if it is a 105, then you're catching it here at the bottom, because this would be a good spot to be looking to get long. There's a nice swing opportunity. I mean, the nice thing is if this is a fake out and the dollar comes back up here, that dollar move to 105 or 106 is a fantastic reward to risk trade for probably a 2-to-1 or a 3-to-1. It's just a trade, But to the downside, if this is more of the same, and I don't want to see just the first break. I want to see a break and a pause, and then I'll look to see if we actually push lower, and then I'm looking to fade, take some breakouts, and go with it. So it's a critical spot. I think the dollar has proven it wants to go lower, but to me, it's a bit oversold. It's a bit overextended. This has been the market pricing in some cuts by the Fed. Has it priced in all 250 to 275 basis points? I don't think so, but it certainly priced in the first little change where the dollar's getting weaker as we come into today's Fed. Okay. All right. So that's the dollar. So when everyone's asking euro dollar, pound dollar, euro dollar is trading at 1.1120. I mean, you could look at this a couple different ways. There's some resistance here, right? There's some resistance here around this 112 to 113 handle, but the next big level that I see on the dollar is all the way up towards 115. So don't be surprised. I mean, and again, we have this nice little breakout. If this is a break on the euro dollar to the upside, a little consolidation. If we see more dollar weakness, euro dollar can certainly head up into 115 before I look for some type of top and then maybe see it go the other way. But I don't know. I mean, to me, it's like I missed it. I was looking to buy the euro dollar back at 105, never got the opportunity. So this whole move from these higher lows, I didn't trade the euro dollar. At this level, I'm interested in selling, but I'm not going to call the top because we have all this indecision and resistance back here on 115. So I'm just going to let price tell me what to do. Okay. Pound dollar, same type of thing. Okay. Pound dollar has been a little bit messier, but we are making higher highs and higher lows. Until this trend line breaks to the downside, I would not be short the pound dollar, right? I wouldn't be short the pound dollar. I didn't see the pound really react to this level right here. So I'm not trying to short this thing. If this wants to go long and stay long, there's a little bit of structure right around this like 136 area, but a nice round number is 140. If we get all the way to 140, that's when I'm going to say I'm more interested in looking for tops on the pound dollar. So from 132, let's say we pull back into 130. Let's say we pull back into 128. Look, I like looking for pound dollar long all the way up towards 138 to 140. But it may come with some pullbacks, which offer a good opportunity to buy this thing a little bit lower. And, stop losses still make some sense. Look for some confirmation on those turns. But 130 is a good support level. 128 is a good support level. And unless I was going to see price all the way back down below 127 or 126, I think pound dollar looks good to the upside. But again, that's basing it on a dollar, dollar weakness chart. Okay. All right. So that's dollar crosses. We got some other ones, Aussie dollar, New Zealand dollar, still pretty sideways and choppy. Both of these look fairly good if they can break out. Aussie dollar, we have some, nice structure in here. I would love to see if the dollar gets weaker. I'd love to see this breakout back to this level here. Open space, if we measure this move and we duplicate that, we're looking at probably 74, 75 on the upside for the Aussie dollar. It could happen, especially if we have a run in commodities. If we have a little risk on trading in China, if we have a weaker dollar, the Aussie could really be a nice beneficiary of that. Okay, so that's what I'm watching on dollar crosses. Gold, let's go oil, gold, silver. Oil's back up. It was just off the 70 handles. We're back at 69.50 for right now on U.S. oil. Still looking to see if this let's say $67.50 to $65 area acts as support. If it does, cool. If it doesn't, then oil has been giving us a bit of concern. Like this has been a potential slowdown in global demand. All right. Now I say that, and the commitment of traders and like hedge funds have been net short oil at record levels. And with commodities being as cheap as they are, something is making me not want to sell oil. I'm not doing anything big on oil other than a couple of credit spreads, a ratio spread or something like that on USO. But I'm just looking to see, does $65 hold? If it does, awesome. If 60 holds, fine. But I'm looking to see if this just stays in a range. Back up into 80 to 85, resistance at 90 to 92.50 or 95. It's just a range to me. So if this level holds support, intermediate level, and resistance. So if we can hold and bounce up here and stabilize, this is where I'm putting in my trades. Anything above that gets me paid. Anything below that, I'll take a small loss. But I'm essentially looking to put that line in the sand right around $65. Okay, that's oil. Gold and silver. Gold had a nice little breakout last week. I think that gold is due for a pullback. I'm still watching gold versus silver. I'm hoping that silver actually outperforms gold in the near term, or medium term for that matter. Look, a pullback is due. I'm not looking to sell gold. I'm just looking for pullbacks to offer a chance to buy lows. So if we have a pullback on gold, this is another reason I think the dollar may get stronger in the near term. A pullback in gold may be seen because the dollar gets stronger in the short term. Gold pulls back. We could have a couple spots to watch. Pull back to here for a short-term bounce. Pull back to here for this past resistance area becoming support. Okay, or pull back even to this trend line area where this is where I look for a bear trap and then look to get long and stay long on gold. So there's a couple of spots that I'm watching, but I'm definitely more medium to long term. I'll just buy whatever dips I can get my hands on in gold and continue to keep it anywhere between like 3 to 5% of my portfolio. But I do like gold. I'm just not buying highs. If it goes higher, I'm just protecting profit and managing trades. If it comes back lower, I'll reposition with fresh trades. I'm going to trade GLD a little bit more. I'll trade GC for gold futures a little bit more and try to put in some trades there. Silver ran right up into resistance and has turned the last 3 days. We had some indecision at that $30 to $31 top. I've said this actually for the last couple of months. If we don't have a convincing breakout to the upside, I could still see silver doing this and still kind of getting into this building phase, accumulation phase before we have the direction I'm really looking for. So I'm not buying the highs. I didn't put on any a bunch of fresh positions. All my trades on silver are sitting down here with stop losses below, plenty of wiggle room to see silver, soften up a little bit and then see if we get some pullbacks. But I'm looking to buy silver. If we come back towards $26, I'm looking to buy. So between SLV, between SI, I like those levels as support. I'm still looking for price to hit my measured move at 35.88 and upwards up to like $45. If I'm watching gold versus silver, so XAU, XAG, compare the two, I'd like to see if this range continues to play out. So if we have lows here and highs here, there's obviously some wiggle room. It's not a perfect range. It's not perfect resistance. But if this does head lower, that means that silver can outperform gold in the near term. I'm okay with that, right? What does the price look like between XAUUSD and XAGUSD? I just think silver looked better than gold. Or maybe it just goes up faster than gold. Okay. So once we get down to this area, doesn't mean that I have to get out of my silver position. Just mean that gold might be due for a nice little bounce. So anyway, I'm long silver, I'm long gold, and I'm looking to see how much longer I can hang on to them. I'm looking at both of them are still accumulation phases for me. Good levels, pullbacks, good structure. I'm looking to add some exposure on gold and silver. Okay, Bitcoin, we're up to 60K right now. We're still making lower highs and lower lows. Bitcoin is certainly going to be one to watch. We've made lower highs over the last couple of months. We're still in this big swing consolidation cycle. I hope that Bitcoin just continues to operate like this and maybe give traders a chance to accumulate some. I like the idea of 50K and 40K and 30K. If they're offered, I think those are good spots to look for. Now, it might be that simple. I'm offering, I'm looking at some dollar cost averaging levels at those numbers like 50, 40, and 30. But I'm also trading IBIT with the same type of idea, dollar cost averaging into that. It's a fraction of the cost because it's a share price that kind of correlates with Bitcoin. I'm also long on MicroStrategy with a variety of option trades trying to generate some income. There's a 10-for-1 split, so that means I actually could own MicroStrategy outside of having fractional shares. I've had several $1,000s in MicroStrategy for a few years now, and it's behaved a lot like Bitcoin, which has done pretty well. But what I'm watching is this high, this high, this high. If we see Bitcoin head down again, I'd almost like to see it take out these lows and then start making lower highs, and then this structure becomes the thing that I watch, because I can start looking at those dollar cost average levels to accumulate, and I can also watch and wait and see if and when we have this breakout. Now I can start getting some confirmation to the upside and then actually take the bullish trade that I want. So Bitcoin is something.
Chris, how's it going?
What up, Frank? How are you, man?
What is new? What are you looking at?
I'm looking at everything per usual. No, I'm going top down. We went through dollar, a couple currency pairs, the S&P, the Qs, the Dow, the Russell, oil, gold, silver, Bitcoin now. Mag 7 wise, I haven't seen a lot of movement today. If I go into the Mag 7s, we have Apple up 1.7%, which is actually one of the bigger movers. Everything else is flat. Tesla's up 1%, Apple's up 1%. Apple's actually up quite a bit today. Interesting. I'm not sure if there's any breaking news on Apple. Let's see. Wall Street position, 50 basis points cut, highly dovish comments. Well, we'll see if they deliver. Apple, iPhone demand softer year over year, UBS says, but yet Apple's up. JP Morgan reportedly in talks with Apple for credit card partnership. Okay, that's interesting news. Apple's like trading the S&P pretty much. So it's not the S&P, I understand, but it trades like it. So we'll find out. But yeah, other than that, things are going to kick off here in about 7 minutes, Frank. I see you're popping on here just in time for the FOMC. What are your thoughts, man? Share some comments and commentary. We talked offline a little bit, like 25 and 50 basis points. What do you think?
Yeah, so judging by the history of this year, it's been a lot of noise on the FOMC days. So usually there's a pop either way, and then it comes back to break even by the end of the day. However, today is probably going to be different. If we are getting that 50 basis point cut,
yep,
and the sentiment around it is highly dovish, I think that's going to be probably, or this might be the meeting where we get a big move. Because all previous times this year we've paused. But if we see that 50 basis point cut, I do think that the market has potential to move very heavily today. I saw in the Discord you had a SPY call for Friday.
Yep.
That seemed like a pretty reasonable trade, considering if we spike really hard today,
yep,
you might get a good IV move there on your SPY. You could close out, or you could wait. What I'm looking at right now too is gold. I would like to see it come down, but if we get a 50 basis point cut, I can't imagine why gold would be coming down. But if we do get a retracement, I'd like to buy gold at either of these levels right here. So 25.30 and 24.70. These are just two previously broken support zones, and the past few days have risen above this channel. I like that as a good technical spot, but we'll have to see, because we get that 50 basis point cut. I think the markets might take off, gold might take off. And then later on, either the rest of this week or next week, they might be assessing how bullish a 50 point cut is going to be.
Right.
So I think maybe what we could see is an initial spike could last 30 minutes, an hour, or whatever, or it could last for the rest of the week. And then following that, I think maybe in the next few days or next week, they start assessing, okay, well, the Fed had to step in pretty aggressively. They had to cut more than they had projected at the beginning of the year, because jobs market is slowing down. Inflation is at like 2.5%, which is good, but they had to step in and be more aggressive, and that might not be a very bullish sign. So I think probably today, I don't want to jinx anything, but I think we could be going to a bullish market, at least initially. But again, I see limited upside. We're at all-time highs almost on the S&P. And if we break those, I'm not sure how much higher we're gonna get from there. That's
Sure.
just where I'm standing right now.
Yeah, I agree. I mean, if I did if I drag a fib from high to low, I mean, we could pull back to this 127. We could have like a one. I mean, that's 580. 580 could then fade and fall. We could still. I mean, there's all sorts of ways I can draw this stuff, man. I mean, if we somehow get to 580, but then we pull back into maybe this low. I mean, there's all sorts of volatility. Like maybe we have something like that, Frank, where it actually like connect the dots, blow off the top a little bit, get to 580, but fail to get to 600, and we turn back in and we have like another sharp support level test. Um, I think the reality is the cut's finally here. We're just going to figure out in 3 minutes here, is it 25 or 50 basis points, assess price reaction, and then the market's essentially just going to wait. Like, what happens to the next level of employment data? What happens to the next round of inflation news? All this matters because the only thing we have from the Fed from now until November 7th is going to be an FOMC minutes release. There's nothing else from the Fed. So this is why I said earlier in the week that I could see a 50 basis points cut justified, because they're looking to say it's appropriate to change policy. We're going to do it. We're going to start a little bit more aggressive so we can, soften any type of labor news or blah. I don't know, whatever Powell wants to say, however he wants to say it. But I think it gives them, in the absence of actual Fed talk, it gives them the ability to say, okay, well, if job numbers come in as expected or slightly softer or slightly better, I mean, they've already cut 50 basis points. So rather than thinking in the next 30 days that the Fed is absolutely behind, they can get ahead of it now and say, here's 50 basis points for you. Chew on that. We'll be back in November and we'll assess whether to do another 25, another 50. And then 25 for the end of the
Yeah.
year still gets us up to 1%. 25 and 50 by the end of the year still gets us to 125. It's like there's still anywhere between 0.75 to 1.25 to 1.5% cuts on the table before the end of the year. That's a really aggressive Fed. And what's going to be tricky about their language is it doesn't necessarily mean that they're dovish. It just means that they're trying to say we're going to be less restrictive. We've waited long enough. It's time to shift. We think it's appropriate, blah, 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 blah. So there's a very crafty way they can say it today. And again, price action is going to sniff it all out and we'll figure out what to do. So,
Yeah,
but
I
there's a
agree.
lot of ways to
And
draw it
another
up.
thing to look out for
Yep.
today, at least, or the rest of this week. So yeah, they can cut now by an aggressive amount, and then they can wait, I guess, in their next meeting in November, see where things are at. Like if the jobs market is steadied, maybe they'll pause. But if we go 50, is that to say that we're going to be in consecutive rate cuts going forward, or what? And that's definitely a question. But at the end of this week too, we have triple witching, I believe, which is like
Friday. Yep.
the in the options market. So Friday we have that. That's something to consider as well.
And end of month and a quarter on
At
Monday.
these highs, on what?
The end of month, end of quarter. Friday is triple witching with them. It's the index expirations, index futures expirations, and stock expirations all Friday, the 20th. And then the following week, we have the 27th and 30th, which will be like end of month, end of quarter. So we got a couple more weeks of pretty decent volatility when it comes to order flows and options. All right, dude. News is in. I'm getting a lot of choppy price action here. Initial reaction is price going higher on the S&P. I'm imagining that we've got a 50 basis points cut. Somebody report the news. Yep, Garrett says 50 basis points. Okay, so we just cut 5.5%. Again, could be very noisy. Obviously, you can see that orders have been waiting all day, and you've got some big fingers on the buy and sell button. Keep an eye on things. So I do have limits in on my SPY order, by the way. That 155 debit, I put in a 350 credit. I'm trying to get closed out if we hit 569, 570 today. Let me take a look and see how that's trading right now in real time. Right now, I'm up about $100. So if I look to close, it's trading about 2 and change, 250. I'll keep an eye on this one. I've got it set to 350. And we should roughly get there. If we hit 569, 570, we should be getting close to that. If we look at the options chain, I'm showing a $3 bid right now, or $3 ask rather, for the 569. If we push up towards 569, 570, now we're above $3, 308. So I'm up about a 40-cent debit. The heck was that? That was a credit spread. I'm up to 322, 325. All right, I'm going to move the stop loss on that long call. Let's get up to 570 today. Come on. I'm up over 100% on that SPY long call. Okay, I'm going to move stop losses at least. Let me see that gamma squeeze. We're right there. Come on, baby. Go tag some 570 for me. You freaking turd. All right, I'm going to keep an eye on that one, dude. I don't want to see this fade. I want to see if this will keep pushing. All right, so chart alarm's going off.
Yeah, the initial reaction.
Yep, it's okay.
It's probably not telling us much.
This is why I also did the expiration out to Friday, because we can obviously have a lot of noise. Look, this move could do this for the next couple of minutes. This is a 5-minute time frame. We could go up here with this large, it's trying to go higher, but the next candle could be a fade. It could be really, really choppy today. I'm just watching, but you can tell that all the order flow is waiting for literally 2 p.m. I mean, this market didn't do anything all day. By the way, if I have anybody that's with me in my daily profit play this morning, it still wasn't hitting our profit target in full 15% by the time we rolled into FOMC today. It was still trading like $5 bid, 5.10, 5.15 mid, crazy. Like it just took all day. And I mean, we were out of the trade in the first 30 minutes, but we just took partial profit. So, okay, I've got the SPX hitting 5669. All right, keep an eye on this one. Here we go. So, and the reason I'm not adjusting the stop loss right now is because I do think there's enough volatility that I could get this thing stopped out at $1.55, at $1.60. So I don't want to move the stop loss because I could get tagged at the stop. And then if we go up and retest today's high or we hit 570, that is still the gamma squeeze I'm watching. So that's why I put in the 569 so I can tap that level and try to get that full profit. That was close, man. I saw it trading up to around 325, but now it's $1 off. So I'll just keep an eye on it. So let's look at the tail of the tape. Says this. I mean, we did have FOMC minutes. You seeing any headlines? Here we go. So the actual was 0.5%. So they did cut. The official rate is now 4.75. Let's see here. Came in below. So it's crazy that the calendars never changed. The calendars all said 5.25. They came in 0.5 actual. The median view of the Fed funds rate out to the end of 2025 is 3.4, which the previous says 4.1. The CME watch tool, the futures market is pricing in way more cuts than that. But I want to see what the dot plot reads. Fed funds rate at the end of 2026, 2.9. Gain greater confidence in inflation moving sustainably towards 2%. That's all BS. There's no way we're coming back to 2%. There's no way. We're going to operate in a 2 to 3% landscape. No, I think we're going to operate in a 2 to 3% landscape for a while. I think the Fed is willing to burn the economy hotter, get this last bit of growth, kick this out there until inflation does become really stubborn and they can't get it much lower than 2.4, 2.3. I don't think we're coming sub 2% anytime soon. And honestly, if we're increasing money supply and we're cutting rates, it's not as restrictive. And so I just think inflation gets a little stickier. But anyway, that's for another conversation. Let's see. PCE inflation end of the year, 2.3 versus 2.6. So they're looking at inflation projections being softer, which is good. 4.4 unemployment rate at the end of 2024 versus 4.2 now. So they're looking at a slight uptick in unemployment. We'll see if the market, doesn't like that. 2% GDP growth versus 2.1. So that's an upward revision of GDP. U.S. futures price in a rate of 64% chance of 25 base hits in November. Here's your dot plot. Let me take a screenshot of this. Okay, so we have consensus. Let's see. If we're going out to the longer run, there's a bit of variance between 3.5 and 2.5. So what we'd like to see in the dot plot is we want to see like one big horizontal line that all the Fed is kind of at the same level. So right now, I mean, the longer run, somewhere between 2.5 and 3.5, but into 2024, you're looking at the Fed settling between 4 and 5%. But most of them are sitting around 4.25 to 4.5. And right now they just cut the official rate. Let me change the color here. The official rate is 4.75 as of today. And so that looks like there's 1 to 2 more cuts, either another 25, and maybe it's 25 November, and then maybe another 25 in December, Frank. That would get us into where this dot plot sits around 4.25, it's probably going to sit around like 4.3, 4.6, something like that. It's going to be some type in between number. But most of them see that we're going to be lower. So the majority of Fed speakers right now, Fed members, are going lower. So I would imagine that November, December, still looking for another 25 basis points each, if not having one possibly at 50 basis points. So we'll see, man. But 50 basis points is in. What do you think?
What do you think your plan would be for the rest of the week? Because now we're seeing some high IV and even into the 5,700s on the S&P for tomorrow. I'm looking at, let's see, 5720, which is pretty far off, giving us a $1.40 credit.
Show your screen. So if I see IVX,
screen, right?
Yeah, go ahead. If I see IVX higher, I might not do a lot of day trading, especially if I'm selling options. I don't know. Like today was literally exactly what I wanted to see price action wise, and I got a fraction of the time decay that I usually get. So if we have another like IVX tomorrow that's high and a move that's going to be like 55 to 60 points on the SPX, I might just stay out of the market tomorrow. But look, I've got positions out to the 20th, the 27th, and the 4th, and the 30th. Like for the next couple of weeks, I think I'm fine. And really, it's just I'm going to go ahead and comb through my portfolio. Can I make any changes? Can I make any updates? Can I take some profit, manage, redeploy? I'm probably just not doing a bunch of crazy short-term stuff when I think it's potentially a lot of noise. So that's my plan. Is like I just don't want to get overexposed, man. If I'm wrong, I'm wrong. But at least right now we've got some price action that's. I mean, in 5 minutes we just went from 562 to 568. That's a $6 move in the SPY. The SPX probably jumped up. Let's go to, that's a lot of noise. SPX right here. I mean, just in 5 minutes, this candle jumped up 53 points in 5 minutes, and it's right back where it started. So I just think it's going to be a noisy day. We're going to have to let price do what it does best, which is hopefully give us some movement. Now, remember, Powell comes to the podium in around 22 minutes. He's going to start talking. I'm not trading what he says. I just want to see what does price do based on maybe a phrase, maybe something with Q&A. I don't know. But I look at it this way. An easy trade for today, and not necessarily today, but like for the rest of the week, is if we have a big indecision candle, if we just take this low and this high, the Fed might do this for the rest of the day, Frank. It might be just really choppy. We've had several FOMCs where this is exactly what happens, where if you see price come down and test and it rips back up here, comes to the highs and rips back here, what that does is that kills every trader that's trying to go directionally, right? And, if you're trying to sell, like, are you, by the way, are you in that trade? Are you in that trade that you showed me earlier, like looking for that thing to pin? Are you in that trade?
No, I didn't take it.
Okay.
I wasn't sure. I thought we would get a lot of noise and we get, good volatility so we can have a lot of IV, and there would be good credit on selling that iron condor. But because I felt like, a cut would probably make it move more than, pausing. That's what kind of kept me from taking that trade. But we haven't really moved that much. We're still kind of in that range. I kind of want to look at it again and see what the IV or what the credit's going to be for that.
Sure.
Because there's a chance that we do end up here by the end of the day before we, fully digest everything and then make more moves tomorrow, I guess.
Okay. Well, before you start calling tops on the SPX today, let me take a look and see if there's any levels that I should be mindful of. So I've still got the 570 gamma level. This actually has increased in net size. So it went from 1800 this morning up to 2246. This just gives me a little bit more conviction for that trade. Again, I'm not trading it for a 0 DT. I'm looking to see, can we hit that level by tomorrow? Yes, no, maybe, but that's my trade. And then let me go to SPX here and see if there's any levels to the upside on SPX. So SPX, I've got gamma levels up towards, I just saw that one disappear. We kind of wicked through those levels. You're seeing these move around a lot in real time. So this is a lot of noise. You know, we're getting all sorts of movements from the 5650 area to the 5675 area. If I start to see that these histograms change where my blue, I want to see the blue fill up. I'll use a different color. If I get the blues to fill up to the upside, then most likely that's going to be enough to help drag price higher. If all of a sudden I see my pinks that are filling up to the downside, then obviously that's a greater pull to the downside. So I'm just gonna let this just marinate for a second. You know, Powell's coming in a few minutes here for the press conference. We're quickly fading the news candle right now, which it's fine. You know, is this a buy the rumor, sell the news? Maybe, but the day is not done. And look, don't be surprised if today the market gives us a low and a high, and intraday trading is just tight, right? Like we come down and test and then come back up. We come back and test and we go back down. Like I could see a lot of whipsaw price action today. So just be careful out there. I don't think this is anything you need to chase. I think this is something just to sit back and watch, and then just monitor everything, right? Okay.
Yeah. Especially if we come back to break even, I'm not sure what to assess for that. That might mean that, so if we come back, close around 5640 on the S&P. So basically where it opened up at after the Fed rate decision, after the statement. So Powell's going to talk about like what he thinks is going on, and
Yep.
I guess sort of address the confidence he has in this sort of thing. I feel like he's going to be indifferent again. He's going to sound kind of hawkish, as in like he's going to be very cautious. He's going to be like, we're not out of the woods yet. Something very obvious. And he'll probably say something like, we'll cut when we feel like we need to cut again. So that could be a pause next time, whatever. And the market may be swinging a lot during this talk, and then might come back to break even, give them like a day or two to understand and interpret what he said for tomorrow and Friday's move. So
yep.
I kind of think that we could end up at break even or close to it today.
Yeah. I think the market's going to be, I mean, from what I'm seeing right now is we had the knee-jerk reaction, we fade that entire move, and now we see where the real trading is, right? Now it's right back to square one.
Mm-hmm.
Now we see if the market's willing to actually break and go somewhere. And maybe it does, maybe it doesn't, but I wouldn't be surprised if there's some manipulation here, then it pulls back and it comes right back in the middle. Okay. Pulls back up here, test I mean, honestly, here's what I will say. If we get another rip to the upside, my 569 call that traded for like 325, I might move it down and try to just trap it. I mean, I want to hit 350. That's my take profit right now. I calculated this morning a 335, and I don't know if I would have been filled on that or not because I saw it trade bid at or ask at 325. But either way, like if we come back up to these highs again, I'm probably just going to take the profit. That's over 100% of the position. So I'll keep an eye on that one. But I'm just watching this on the 1 minute chart. For me, if I've got popcorn, I'm watching it right now. This is where the real trading begins. So Powell's coming to the podium about 15 minutes. I'm still just going to look at real-time news. If Chandler plays the stream over and we can sit here and talk through it, I'm just going to sit and listen. But I want to watch price. Obviously, that's always going to be my my plan.
Yeah.
All right.
So when is he coming up? 15 minutes from now.
15 minutes. I want to see if. Well, so I'm going to keep this 1 minute chart up to see intraday stuff on the SPX. I'll come back to this. You know, I'll glance at this every couple of minutes. And actually, you know what I'm going to do? Let me do this. I'm going to quickly shift over. So my 350 credit, I'm going to go ahead and set this with a replace to 325. I'll go 325, and that way I should be able to get out of the trade. And I'm going to keep mine a little bit more open-ended. So for my managed accounts, I'm going to try to get this at 325. And that way those can get taken out for profit. I'm going to keep mine open and see if I can just manage the stop loss into maybe, $3.50 to $4 credits. So that's the one thing I'd like to make an adjustment on really quickly. I just took profit on the 565 by 564. That hit profit. Okay, good. All right, so let me replace this down to 325. Okay. All right, a couple more. 325. And so if anybody has my alert in the Discord, I'm changing that limit to a 325 credit right now. Okay, a couple more here. And had I gone to break even, I would have been stopped out at break even. So that's why I'm keeping it alive. And that's also why I didn't do a 0 DT today, because that it's just crazy how fast that premium changes. All right, 325. There we go. And what would be really nice is if somehow I didn't get hit for profit today, but we gapped up tomorrow and we opened up and I get closed above my limit. So I put in a credit at 325, but we open at 375 or 4. We get the immediate bid and I get some positive slippage with a gap higher tomorrow. That'd be pretty ideal. So anyway, we'll see what happens. All right, so that is all of these. I'm going to keep this one in at 350, but I'll make a quick adjustment if needed. So I'm gonna keep this one up to potentially replace and put in a stop loss. So I'll keep that one ready. We're just kind of jumping around between that high and low. Keep an eye on this one. Powell's coming in 13 minutes. I do want to see this, Frank. If I refresh the CME watch tool, I want to see if any of these numbers changed. So now, and this might take a second to refresh, this Fed chart's probably getting watched like crazy.
57. Mine was 57%, 50 basis points, and then 43%, 25.
Yeah, it
So
came.
this
So
might
it
have been
came.
the
It was
first time they were
65.
wrong, right?
No, it was right. It had the higher percentage at 50 basis points. It was correct. It was 65% yesterday, 65% probability yesterday that dropped down to like 57 or 53 today, but it was still favoring that 50 basis points. So technically it's still correct, but it was definitely more of a coin flip today than I was expecting. So, all right, this Fed watch tool hopefully is loading. Come on. I'm not getting the refresh. That's all right. I'll keep an eye on this one. Price action wise, again, let's see if we can come back and retest the high. I might as well just set a chart alarm up here. That's a 5. I'll just set I've got the chart alarms on the SPY already, so I'm going to move this one down slightly, see if we can tap that high again. And then SPX, just good price action. I mean, if you're a price action trader, this is pretty darn good. I mean, for anybody that's going short term, you get in there, tight stop, you're already at break even. You got about 5 or 6 minutes of price going your way. I mean, it's short term stuff, but believe me, there's some 1 minute big pockets out there that are trading that type of stuff, and this is kind of price action 101. So something to keep an eye on. But I'd like to see if we tap the highs again, but I think we're going to be noisy within this. Maybe Powell can, and again, watch for those fake outs, right? Everyone gets all excited. Think how many people like are dumb enough to buy up here and then they buy and then they get reversed. Think how many people are dumb enough to sell here and then they get reversed. So if it's going to be noisy, there's going to be some like slightly higher highs or slightly lower lows, but those could be traps. So just be careful. All right. What do you want to take a look at, man? Anything? I'll keep coming back to this price on the 1 minute chart. I'm trying to refresh the watch tool. There it is. So here is your, something's wrong with his website because now it says 6.5 to 6.75. That's obviously not what we have here. But I want to see if the other months have been adjusted. Let's go probabilities.
November.
Probabilities. Ah, fudge. Yeah, this thing's all busted up, man. There's probably a lot of traffic on the old Fed watch tool. But it is what it is. All right, 10 minutes for Powell. Let me see if we've got anything in the headlines. So there's your dot plot.
What do you think
money
of oil?
markets? I mean, I like oil at support. I've got credit spreads in. Line in the sand is at 65.50 for me, $65. I'm just trying to see if oil will maintain some type of support over the next couple months. I've got November expirations on my oil. I'm trading CL for crude light futures. So I'm going after it's a 1-to-1. It's 50 cents credit for 50 cents risk. But if we stay above 65 or 65, it's profit. So I'm just looking for a little support to hold. global demand has been sliding, but money supply is coming back. There could be, I don't know, man. There could be a whiff of an expansion still left. It's like, think about this. If we just had a full tank of gas in the economy for the last decade, I would say that we are probably on the last 50 miles where we have the reserve tank, but there's still enough to get us into the rest of the year. There's still enough to get us to our destination, maybe by end of the year into Q1 next year. I'm not necessarily turning bearish until probably after Q1 next year. And when I say turning bearish, it's probably just hedging, but that gives us I don't know. To me, I'm a little bit more bullish, but I think it's necessary that I just have to hedge. I have to hedge. I have to manage risk just in case we have a surprise. But I would say that this market might find a way to ignore a lot of things and just melt up and make no sense other than just trying to go higher. So the Fed starting to cut rates for the first time in 4 years. It does have a good impact in the market. It historically has a great impact in the market. I just showed it, like 20 for 20 with a year out, the market tends to be higher, but we're going to have some volatility along the way. That's not going to surprise anybody. But what has this market done for almost a century? Finds a way to go higher. So it's hard to be a permanent bear. You can take your stabs, but my career will not be defined by I made money during the one bear market that we had. My career is, if we have a 10-year trend or 10-year bull market or what we've had the last 20 years, it's been pretty easy to make some money. It's just time in the market. So anyway, money markets see 57% chance of the Bank of Canada cutting by 50 basis points in October. This is another thing too, Frank, just talking on currencies and other central banks. Now that the Fed has cut and come out swinging with 50 basis points, you got to wonder where those other central banks are going to fall as well. Bank of Canada, I could see cutting aggressively. ECB, they already cut by 60 basis points. So they're going to cut more by the end of the year. Bank of England is actually tomorrow. Their forecast to be the same. They're not looking to cut. But we have Aussie employment, New Zealand GDP tonight. We have Bank of England tomorrow. They're expected to pause at 5%. I wonder if they're going to cut with a surprise forecast. Yes, no, maybe. I don't know. And then BOJ overnight on Thursday to Friday. Who knows what they do? They're probably not raising rates, but the Nikkei, for example, I haven't really looked at the Nikkei today. Nikkei is right here. Boom. Nikkei is just it's volatile. I think Nikkei is gonna. I think we're gonna deal with the Nikkei inside of this range for a while. This could be a lot of noise in here in the Nikkei. I'm interested actually in establishing longs on the Nikkei at those lows. This is a 27% discount. If this offered a 27% discount in the S&P, I would buy it 100% of the time. Even if it went down 40 and 50%, I'd still buy it, because that discount for me, after some point in time coming back up to those highs, or a discount lower coming back at some point in time, I'm buying those discounts. So I treat the Nikkei the same way. And maybe that's that's my little revenge on the Japanese yen for all the annoying things they give us as currency traders, is trying to just buy some heavy discounts on the Nikkei. So
the unpredictable yen,
or
BOJ rather.
The incredible
edible. Have you taken
a
look at the yield curve? We're still back in normal levels. We're at 0.06. I thought we would have like a greater move as a result of this, but we're still, we were inverted. Now we're in the reversion territory.
Has there been? Yeah, we're disinverted now. I did see that the 2 and the 10 are still disinverted by about 10, 9 to 10 basis points. I do want to watch this though. So the immediate reaction here is we're up off the lows on the 2-year. We're up off the lows on the 10-year. We're up off the lows on the 20-year. So I mean, I want to see where the numbers settle. It's a little bit easier to go to a different. Hang on, I'm gonna go back to SPY here. And let's go to this chart for the daily. Let's go to that 2-year, 10-year. 2-year. So, pushing to fresh lows, the bond market has been pricing this in. This is basically the bonds telling us, yields are dropping, bonds have been rallying, TLT's up above 100. Is it possible for TLT to hit, 105? That's a symmetry move. Maybe. I don't know how much uglier and nastier the yields get to the downside, but we're going to find out. I mean, I mentioned this, was it this week and last week? I said, if we're going to see like another kind of expansion in the market, we might have to see the 2 and the 10 go from disinverting and reinverting. So they'll pull one out of the Maverick playbook, and we were inverted, right? Yes, I know the finger goose. All right, that's old school. That's not Maverick. That's the original.
Yeah, probably went over.
Yeah.
Went over.
Come on, man. We don't know any 80s movies here. All right. So somebody's asking, what about the dollar Swiss? I'm still buying the dollar Swiss, like a fool, but I'm buying the dollar Swiss. So we're at 0.84. Here's my weekly. I have a trade pending on the dollar Swiss at 8,200 and 8,000. So I'm still going to cost average into the dollar Swiss, just because like that was an intervention level. Are we going to flash crash to 7,000? I don't know. But if we have some type of like 1, 2, 3, 4, 5, if this is some type of 5 drive or 3 drive pattern, perhaps it comes up and strikes these highs again. But if it goes lower, I'm still willing to kind of scoop it up at these. I mean, this is a 15-year low, and any lower than that, it's never been lower than 2011. So for a 30-year chart, I'm going to buy and enjoy a little bit of carry while I can. So if it's 4.75% for the Fed, Swiss National Bank comes out next week on Thursday for a rate decision. I would love to see them cut as well, if possible. So that's what I mentioned before. We will have to keep an eye on the central banks, because right now, all central banks are leaning this way. They're cutting rates. The BOJ came from negative to 0 to now positive. The BOJ is here. Okay. And then all others are going from high and then cutting down. So is the BOJ going to stay? Are they going to go up more? And so eventually, yes, this carry trade does unravel. But if I see cuts in the Fed, cuts in the BOC, cuts in the Bank of England, the ECB, the carry trade looks less and less attractive. But if I can still maintain some type of positive swap on the dollar Swiss, I will. And I'm going to continue to go after that. So
then dollar yen today is down over 1%.
Where is it going, up or down? So the dollar's dropping, the
down.
yen is up, so it's heading lower. Okay.
Yeah. So if we take out those lows at what is this, 139.6? I don't know.
Yep.
This has been one of my main indicators to look at downside in the markets.
Sure.
So when did this drop?
Well, it's
so
funny.
July
it's funny.
11th. That was an early. Go ahead.
Oh, I was going to say, like, you say this is the downside in the market. I mean, look, dude, this dollar yen is lower. What's the S&P done? What's the Dow done? Like, I mean, this inching lower doesn't mean that the market, I don't know. I don't think the market's just turning, but I don't know. I mean, BOJ is coming out Thursday to Friday. I don't mind this trade. If I get a long position filled, if I did like a buy stop on the dollar yen, it goes higher. I think that's an easy, like, tight stop loss, and see if we get some type of like radical BOJ policy where they say all the right things and the market rips and all of a sudden the Japanese yen gets weaker. If it gets weaker, I mean, that's an easy trade to the upside, but I would not take a Japanese yen trade without stop losses, or stay the heck out of it and just stop following the yen. I mean, I look at it this way. If you didn't trade the yen with this drop, you kind of missed it. And you had, 2,000 pips to go after. So I don't really feel like participating and chasing what could be very volatile, very choppy. Who knows what it wants to do? And I don't know, man. I guess I don't care enough to like try to grind on the yen when it's such an unfavorable currency pair to trade sometimes. So just not my favorite. So yeah, I'm expressing my personal beliefs in the Japanese yen, which I don't love. So, but I feel like if you miss the 2,000 pip move, going after it now feels like, what are you doing? You missed it. You missed the big move, right? A little bit lower. Yeah, sure. Maybe you'll go down to 130, 128. I don't really care. I'd rather see if I'm going to short it. If I want to short the dollar yen, it's going to be here. We got to pull back first. Then I can look for more. If it just goes, I'm not trading that. I'm just going to stay out of it.
Good afternoon.
So I want to see
it's not
structure.
My colleagues and I remain squarely focused
not a
on
trade
achieving
I'm
our dual
looking
mandate
for.
goals
It's just an
of maximum
indicator. So if it
employment and
keeps
stable
falling,
prices for the benefit of the American people.
Probably be looking at
Our economy is strong overall
the
and has made
downside on the
significant
S&P and stuff
progress
like
toward
that.
our goals over the past 2 years. The labor market has cooled from its formerly
let's see what old
overheated
Paul has to
state.
say.
Inflation has eased
Probably
substantially
not
from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a 0.5 percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand in the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of 2% over the next few years. In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months, a notable step down from the pace seen earlier in the year. The unemployment rate has moved up, but remains low at 4.2%. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year, 0.4 higher than projected in June. Inflation has eased notably over the past 2 years, but remains above our longer run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.3% this year and 2.1% next year, somewhat lower than projected in June. Thereafter, the median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. Our primary focus had been on bringing down inflation, and appropriately so. We are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored. Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance, and we are attentive to the risks to both sides of our dual mandate. In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by a 0.5 percentage point to 4.75% to 5%. This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance. We are not on any preset course. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and 3.4% at the end of 2025. These median projections are lower than in June, consistent with the projections for lower inflation and higher unemployment, as well as the changed balance of risks. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve Leisman, CNBC. Thank you, Mr. Chairman, for taking my questions. In
Still
July,
not a
you
lot
said
of
you weren't
movement on
necessarily
the
thinking about a
S&P.
50. You didn't want to be specific, but you said you were thinking about a 50. The inflation data last week came out a little firmer than expected. Retail was strong.
I think
Core
this
GDP
is
running 3%. So what
this
changed?
is a bit of a reassurance to the markets right now. I think Powell's trying to say all the right things. I just typed that in the chat here. You know, I'm not saying they've declared victory on inflation, but this sounds a little bit like he's leaning that way. Like, hey, look, we know that we talked about 25, but 50 with our dual mandates and everything. So I don't know. Price action leads, but
let me jump in.
a little chuckle from old
Since the
Powell.
last meeting, we have had a lot of data come in. We've had the two employment reports, July and August. We've also had two inflation reports, including one that came in during blackout.
Got kind of quiet.
We had the QCEW report, which suggests that suggests that the payroll report numbers that we're getting may be artificially high and will be revised down. You know that. We've also seen anecdotal data like the Beige Book. And so we took all of those and we went into blackout and we thought about what to do, and we concluded that this was the right thing for the economy, for the people that we serve, and that's how we made our decision. So that's one question. What was the second and third?
How do we make the? Sorry, thank you, sir. How do we figure out in the months ahead? Is there another 25 or 50 coming in? Based on what shall we make that call? Thank you.
Sure. So, a couple things. A good place to start is the SEP. But let me start with what I said, which was that we're going to be making decisions meeting by meeting based on the incoming data, the evolving outlook, the balance of risks. If you look at the SEP, you'll see that it's a process of recalibrating our policy stance away from where we had it a year ago when inflation was high and unemployment low, to a place that's more appropriate given where we are now and where we expect to be. And that process will take place over time. There's nothing in the SEP that suggests the committee is in a rush to get this done. This process evolves over time. Of course, that's a projection. That's a baseline projection. We know, as I mentioned in my remarks, that The actual things that we do will depend on the way the economy evolves. We can go quicker if that's appropriate. We can go slower if that's appropriate. We can pause if that's appropriate. But that's what we were contemplating. I would point you to the SEP as just an assessment of where of what the committee is thinking today, what the individual members rather of the committee are thinking today, assuming that their particular forecasts are realized.
Go to Chris.
Hi, Chris Rugaber at Associated Press. Thank you. The projections show that the Fed officials expect the Fed funds rate to still be above their estimate of long-run neutral by the end of next year. So does that suggest you see rates as restrictive for that entire period? Does that threaten the weakening of the job market that you said you'd like to avoid? Or does it suggest that maybe people see the short-run neutral as a little bit higher?
I think the way I would really characterize it is this. I think people write down their estimate, individuals do. I think every single person on the committee, if you ask them what's your level of certainty around that, they would say there's a wide range where that could fall. So I think we don't know. There are model-based approaches and empirically based approaches that estimate what the neutral rate will be at any given time. But realistically, we know it by its works. So that leaves us in a place where we expect in the base case to be continuing to remove restriction, and we'll be looking at the way the economy reacts to that. And that'll be guiding us in our thinking about the question that we're asking at every meeting, which is our policy stance the appropriate one? We know, if you go back, we know that the policy stance we adopted in July of 2023 came at a time when unemployment was 3.5% and inflation was 4.2%. Today, unemployment is up to 4.2%. Inflation's down to a few tenths above 2. So we know that it is time to recalibrate our policy to something that is more appropriate given the progress on inflation and on employment moving to a more sustainable level. So that the balance of risks are now even. And this is the beginning of that process. I mentioned the direction of which is toward a sense of neutral. And we'll move as fast or as slow as we think is appropriate in real time. But what you have is our individual accumulation of individual estimates of what that will be in the base case.
Howard.
Howard Schneider with Reuters. How close was this in terms of a decision? You do have the first dissent by a governor since 2005, I think. Was the weight clearly in favor of a 50, or was this a very close decision?
Chris, do you have any
I think
final
we had
thoughts?
a good discussion.
I'm putting in a
you know,
trade.
to go
The
back,
dollar's sing right now.
I talked about
I'm
this
just
in
watching
Jackson,
price
but I
action
didn't address
unfold.
the
It looks like
question
it's
of the
noisy.
size of the cut left it
So I'll
open,
just
and I
continue to
think we left
monitor
it
and see what
open going
happens
into
for the remaining
blackout.
day and tomorrow.
And so there was a lot of
But I
discussion.
put on a trade. I'll post this in
back
the
and
A1
forth,
trading
good diversity
Discord
of
for the
opinion.
dollar
Excellent
Singapore.
discussion today. I think there was
Nothing right
also
now.
broad
Like it's a
support
long
for the
term.
decision,
It's a big picture play. So
that the committee voted on. So
the dollar
I
is
would add, though,
breaking
look at
lows
the
right now. I
S&P.
mean, the currency
All
strength chart shows dollars getting smoked. The yen is on top along with the Kiwi. CAD is weak, dollar's weak, but we're still looking at noise. With the S&P, we didn't break the immediate 2 o'clock news low. We didn't break the 2 o'clock or 2:05 news high or 2:10 news high. It's choppy, and there's Q&A going on with Powell. We could see this being like noise, but tomorrow's a new day, and expect this type of anticipated volume is probably getting released into the market tomorrow. So I'd say Thursday, Friday, just be nimble, I guess. I mean, either you've got positions out further so you can eliminate some of the noise, or you're just going to trade pseudo. I mean, look at futures, man. I mean, futures has been just choppy. These are 5-minute candles, 5-minute candles, like super choppy on everything. So futures is hard to trade. There's no trend, price action here, and it's just garbage. So not bad, but no real direction. So I say tomorrow's a new day. I hope that my 569, 570 levels get hit. Those are the big gamma levels, but I did see about 500 net disappear out of that 2,500 current net position. So it does show there's been some dumping on the high side. So I think there's probably a little bit of a reducing exposure at this time. So yeah,
I think that my final thought is if we close close to break even, that will help reaffirm my idea of limited upside. I'll probably look to continue to sell calls or credit spreads above price. Depending on where it goes tomorrow, maybe take some credit spreads, above the all-time highs. And then I have my VIX plays for October 2nd.
Okay.
So yeah, we'll see. But I'm not really seeing a whole lot of bullishness, and obviously I can be very wrong about that. But we'll have to see where it closes today, and then if it's kind of break even, I'm probably going to be less bullish and more so on the short leaning side. But that's all I got. And gold. I think gold is going to
fresh
be
highs today.
Yeah, it's going to be an easy winner if we can get a pullback on it. I want to pick up some of GLD, but yeah, regardless where the economy is like not as bad as we thought or whatever, we're still devaluing the dollar. Gold trades directly against it. I think gold is a good long play for Q4 and possibly all of 2025. So
Yep,
those are my thoughts.
I like it, dude. I'm posting this chart right here and posting this in the Discord. So I've got 3 entries in on dollar Sing. I like the play. It's definitely a long-term play. I live there. That's the only reason I like to trade it. I think it's pretty firm between like a 120 support and a 130 to 140. I think the Monetary Authority of Singapore likes to keep it there. So it's not even close. We're trading at 1.29. I'm literally waiting for price to drop 800 to at 900 pips before I get in. But I'm going to set it out there. This is one of kind of my big kind of investment plays on Forex. So it's one of many. All right, man. Well, I'll let you go. I'm actually doing another session here at 3 p.m. So I'm going to start that up here in just a few minutes. But it was nice to kind of get through this with you, get through the noise with you. It kind of did what you and I talked about offline as this was all coming in today. It's like much anticipation. You can see the aggressive nature right at the news, but it was the immediate reaction and then just no follow through. So tomorrow and Friday, brand new days. And I'm curious to see if this actually moves the market tomorrow pre-market, like after the bell closes today. Where do things move around? What do we do coming into opening bell tomorrow? Is there like gaps up or gaps down? We're about to find out. So anyway, Frank,
Yeah,
I'll see you tomorrow, dude.
we'll see. Yeah, thank you. And good luck on your next session.
All right, thanks. See you, everybody. Bye.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.